TVL. Let me start that over. DeFi TVL is down 56% from its all-time highs, and the overall crypto market is down 48% from its all-time highs from 2025, which is getting the narrative flying around. Is DeFi dead? Is this really the end of crypto? And to be honest with you, this particular bear market is not as bad as previous bear markets, but it definitely feels like things have been contracting. And that is a very, very valid point. So what I want to talk about today is what's going on with DeFi, and is it really the end of crypto as we know it? Make sure you hit the like button, make sure you engage in the chat, because today we are going to talk about the direction that on-chain finance is going. Because yes, DeFi may be down, but I do not think it's dead. I think it just might be growing up a little bit, because even though the retail crypto market, again, TVL is down 56% from its all-time highs, but at the same time, institutional finance is doing more on-chain than ever before. So is DeFi dying, or is the money moving on? Because retail DeFi does not equal institutional on-chain finance. I apologize if there's some hiccups. We'll talk about that later. The retail didn't imagine this, though, because the damage is very, very real. Total TVL is down 56%. Market cap overall is down 48%. Bitcoin down 50%. Ethereum down 62%. And we've been seeing this reported across multiple exchanges. We heard it from Robinhood, Coinbase, Kraken, literally every single exchange. Spot volume is down, a total of roughly an average of 72% from its all-time highs. If we want to look back even further, we can look at the October 10th debacle, where over 19 billion was liquidated on 1.6 million traders, right? These things have been happening. The pain is real. The bloodbath has been there, but the DEX share did hit a record 19.5%. Because this wasn't just a DeFi crash. All of crypto activity constricted and is beginning to consolidate. DeFi is down 56%. So why did this do 8 trillion, right? Why did Broadridge do 8 trillion? Why the DeFi was down? Because retail didn't stop gambling. It just found new casinos. A lot of retail went into meme tokens and meme stocks, prediction markets, and leveraged ETF. Coinbase consumer volume is down 24% quarter over quarter, and active wallets on dApps dropped 22%. Crypto is no longer the only place for extreme risk. The casino has moved elsewhere. AI stocks, prediction markets, meme coins, and leveraged ETFs. And I keep going the wrong way on my slides. While retail is leaving, finance was moving on chain. We saw real world assets 10x over the last 2 years. Tokenized treasuries, Broadridge repo, USDC volume is increasing. Tokenized equities up to 23 billion in monthly turnover, and stablecoins now at almost 300 billion. We're seeing BlackRock, JP Morgan, Franklin Templeton, State Street, and Fidelity all starting to come on chain. The casino got quiet, but the bank opened. And keep in mind, this is not one particular chain we're necessarily talking about right now. This is all of on-chain finance. And I still keep going the wrong way. But what if the dashboard can't see the market? Again, public blockchains have a full viewable ledger where everyone gets to see. But when you start looking at some private chains like CANTON, they are private by architecture. Again, private transactions are exchanged between Bank A and Bank B. Synchronizer coordinates. I don't know why my app put an X on there. That is not a dig at XRP. Cash agents, securities, and regulators create atomic settlement. This is the total on-chain finance, not a DeFi dashboard. Not all announcements are created equal either. You have early, like the MUFG or Project Masubi, that are just now doing proof of concept or testnet. You have level 3, which is signed and building. For instance, JP Morgan's Connexus and JPM Coin, HSBC with tokenized deposits, and Northern Trust with tokenized custody. Level 2 means it just went live. DTCC started production trades July 15th with the full launch in October. TradeWeb is doing on-chain US Treasury transactions. Moody's and Visa both came on board. And then level 1 is at scale. We're already seeing Broadridge move at scale. Goldman Sachs, USDCX is live on Canton, and Franklin Templeton's Benji money market fund is also live on Canton. But it's important to discern the difference between pilot and production. They are not the same thing. Technology wasn't enough. The rules had to be there to move. So again, NASDAQ tokenized shares, SEC approved. We see them working on that with Kraken. DTCC tokenization, SEC no action letter was given. We see that in live production trades on July 15th, full rollout in October. The Genius Act is law, but it's not yet operative. We won't see Genius Act go into effect, I believe, until January 18th, which at that point, all stablecoin yield is illegal, which will move participants into more traditional markets like tokenized treasuries, tokenized money market funds, and tokenized private credit. Clarity Act is pending. Will it get through the Senate or will it not? And the SEC innovation exemption for all of crypto was delayed, waiting on a joint discussion with both crypto and bank participants. But U.S. capital markets are not a parallel to the crypto market. They are the existing market, but tokenized. Who is going to be able to capture that? What chains are going to be able to capture value? Because we're going from a traditional share or a traditional treasury to a tokenized share or tokenized treasury. All of this is happening right now. Now, let's break the thesis. Let's talk about Canton, because everyone wants to get bullish, but let me tell you what actually destroys the thesis. The bear argument that you will hear about Canton Network. All of these things are coming on Canton, but the token is still decreasing in value. It's down nearly 40%, right? It's still tiny. 16.2 billion in tokenized treasuries versus the 28 trillion US Treasury market. There's room for growth for more players besides just the Canton Network, and growth is slowing. Broadridge DLR repo year-over-year growth has been slowing. Has it increased? Is it scaling? No, not yet. And the token price is down 51% from its all-time high, while institutional adoption has been taking place. But again, we're waiting for it to burn CC. The DTCC tokenization soft launch had not gone all the way out yet. Correct? Sorry, my brain is not braining. I've been working really hard. I'll tell you guys once I get through this presentation. But not all growth is created equal, and skepticism is a valid strategy, especially when you look at how things have played out over the past several years in crypto. Got it right this time. Enterprise blockchains have already failed before. Don't forget, digital asset did have ASX that failed previously, and it was written off. So history says be skeptical, but production says let's keep an eye on this, with Broadridge doing $365 billion a day and the DTCC now in production, full rollout in October, not to mention what we talked about with the Japanese bond repo group and Project Masubi and Versana. DeFi isn't dead. It is growing up. Finance is moving on chain. We may have seen a very large decrease in DeFi numbers from retail participants as everyone's been wiped out over the last several months. But at the same time, we've seen institutional finance begin moving on chain or making preparations to move on chain. So the question is, how long will it take them to do so? And will Canton actually, or CC, actually capture the value? Will value move to CC? That is the ultimate question when it comes to this. So, real quickly, I want to pull this up too. I did this post this morning because A new announcement went out today. I'll pull up the announcement first and then I'll bring it to you. So Digital Asset put out a post highlighting a interview that Yuval Ruz did while he was in Korea. It was all written in Korean, and I'm not going to read the entire article to you, but I did translate the entire article on X. If you guys want to read it, it's right here for you. I did pull a few things that I thought everyone should be aware of. So number one, more announcements are coming. Ruz said that Digital Asset is working with multiple partners on new use cases in Korea and expects several additional announcements in the next few weeks. That's a pretty specific window. So here in the next few weeks, we should have multiple new announcements coming from CANTON or Digital Asset about their work in Korea. CANTON Network wants to become a major rail in Korea. We hope that CANTON Network becomes an important network that is widely used in the Korean market. This comes as Digital Asset is already building relationships with Shinhan, Hanwha, KBC Securities, and Wavebridge. And Korean institutions aren't just experimenting. Shinhan and Hanwha have invested directly into Digital Asset. Watch the insurance. When asked where he sees the next major opportunity in Korea, Ruz specifically called out the insurance because of the size of the market. Securities, repo, payments, credit, deposits, and potentially insurance. But maybe the most important comment was about regulation. Ruz pointed directly to the DTCC tokenization of US treasuries on CANTON and emphasized it did not require the Clarity Act. Regulators were ready to clarify what could already be done under the existing laws, and that is important because while crypto waits for legislation, institutional finance is already building with the laws that we have today. And apparently, we're about to find out what else CANTON has been building in Korea. So again, you can read the entire article if you want. You can follow me on X at LongViewCrypto. But again, very bullish for CANTON in Korea. It looks like several more announcements will be coming. It was, I suggest you read the whole article. There was a lot of good information in there. So let's hop